This is the last time I've ever talked about this in CNBC, okay? So help me God.
So Bitcoin is up around 150% from its bottom around 1 year ago. And after the successful launch of the much anticipated 9 spot Bitcoin ETFs, investors have poured around $2 billion into them in the first 3 days of trading. Now, considering all of these positive developments, you would think that the CEO of one of the biggest banks in the world, JPMorgan, would be bullish on crypto, right? But oh boy, were you wrong. Because Jamie Dimon recently appeared on CNBC just to tell everybody to...
So just please stop talking about this shit.
So I guess we have something to talk about in this video. So without further ado, let's get started. Alright, hi everyone, welcome to another video. And today, for some reason, I woke up and decided to choose violence. So right now I think it's around 8 a.m. here, and I think I'm going to go on a rant on Bitcoin. And I have a couple of points jotted down on my phone right here that I will use to structure the video a little bit. But please be warned, this is going to be a rather unstructured rant. So where do I start? Well, I was recently asked whether the launch of the spot Bitcoin ETFs changes my perspective on Bitcoin a little bit. And my answer was, well, that I can see that to some extent the launch of Bitcoin ETFs gives this asset class some validity. But that's about it. Because if you look under the hood and try to truly understand what the asset Bitcoin or cryptocurrencies as a whole actually are, well, you should realize that you cannot invest in the original sense into this asset. Because this is something that John Burr Williams actually already outlined in 1938 in his book, The Theory of Investment Value. And in it, he explained that any asset is only worth what the future cash flows produced by that asset, discounted back to present value by an appropriate discount rate, are actually worth. And so let me be very clear about this here. Bitcoin doesn't have any intrinsic value. There's nothing immoral about putting money into Bitcoin. I'm not saying that you cannot make money in Bitcoin or other cryptocurrencies, but I'm saying and telling you that Bitcoin itself doesn't have any intrinsic value, which means that you cannot, in the, as I said, literal sense, invest in Bitcoin, but rather you are speculating. You're basically ascribing to the creator fool's theory, where you are hoping that there will be a creator fool in the future who will pay you more for example, a Bitcoin, than you did.
I'm used to asset classes where, like a farm where they have output, or a company where they make products. To have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more for it than I do.
So I'm basically in the same boat as Jamie Dimon here. You can do whatever you want. You can invest in Bitcoin, but just be aware of the fact that you are speculating and not investing. You cannot invest in something that doesn't throw off cash, because you will not be able to calculate the true intrinsic value of that asset. And how do you want to invest by paying less for that asset than it is actually worth if the asset doesn't have any value?
Okay, now my last statement, the last time I ever talk about Bitcoin is I defend your right to do Bitcoin. I think, it's okay. I don't want to tell you what to do. So my personal advice is you don't get involved, but I don't want to tell any one of you what to do. It's a free country.
I think one of my biggest strengths regarding Bitcoin is actually that I don't care where the price of Bitcoin goes. Does it go up another 10x, 50x? I don't know, even more? I don't care, because in my investment framework, I follow clear and proven processes. As I just said, I try to pay less for an asset than it is actually worth, and I try to not speculate. People will get lucky in the stock market, or in markets in general, I should say. There will always be someone who will get richer quicker than you do. But there will also be people who will lose a lot of money in stocks or in other financial assets. And if I had to make a bet over the next 50 years, where's Bitcoin going to be? I would say chances are pretty high that it will be a zero. And that's what I was just saying. So you can only make money if you have good timing. You buy, you sell when someone else is willing to pay more for that asset, and you have to be able to make that sale before the price declines. And just to get back to why Bitcoin and cryptocurrencies don't have any value. Like, just go on Twitter. I saw the reactions to Jamie Dimon's video, and people will be all over the place. You've got these people with laser eyes. You've got quite sophisticated people who are CFAs. And whenever Bitcoin, or for that matter, other cryptocurrencies are criticized, they will jump up aggressively. They will just throw accusations and insults at those who disagree with them. And then they are basically in this echo chamber that is reinforcing, well, we, the crypto pros, who are going to revolutionize the world, we are right and everyone else is wrong. And they're not even open to listening to counter arguments. So if you are a crypto bull, I want to encourage you, let's have a productive discussion in the comments down below. And what I think all of these quote unquote crypto pros get wrong is that there is a major distinction between crypto and the blockchain technology on the one hand.
Blockchain is real, it's a technology. We use it, it's going to move money, it's going to move data, it's efficient. We've been talking about that for 12 years too, and it's very small.
And the asset, basically the tokens you invest in, on the other hand. Of course, if you truly believe that only things that produce cash have value, well, then you can invest in the technology by, for example, investing in a company that makes use of the technology, that is creating real value for people in the world, which would then allow them or that business to earn money, to earn profits, which could then be distributed back to shareholders. This is a way how you could actually benefit from the value of the technology, assuming there's a lot of value.
You know, there's, first of all, and I'm not trying to make a joke here, there are use cases, AML, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases, and you see it being used for hundreds, maybe 50 or $100 billion a year for that.
You cannot invest in crypto by investing in some kind of digital token, which is not going to grow over time. It's not just, it doesn't produce anything. You can store it in your digital wallet, which might bear some risk as well. And I don't know, 50 years from now, if it will still be a thing, it will be the same token. And then another argument the crypto community will always present is that basically crypto is digital gold. Gold, which is another non-productive asset, another asset that doesn't have any intrinsic value. You could tell me gold is worth, a bar of gold is worth $100. You could tell me it's worth $10,000, or you could tell me it's worth $10 million. There's no way for me to prove you wrong. And I think the same is true for Bitcoin, by the way. And I think I've made that clear already. But the point I'm trying to make here is just look at the long-term returns of gold as a non-productive asset. Gold has barely beaten inflation. And I think it was Jeff Gannon from the Focus Compounding community, or podcast I should say, that has said that over the very long term, being invested in anything else than stocks will likely drag down your overall returns. And that is something I ascribe to as well, because if you look at the historical long-term returns of various asset classes, so say over 100 years, you will see that stocks are by far the best yielding or highest yielding asset out there. You might throw real estate in there as well if you add a lot of leverage, but then again, you have to make use of leverage to boost up your returns. Oh yeah, 2 more points. Obviously, Cathie Wood also reacted to Jamie Dimon's comment, and she was throwing around some technological stuff that, quite frankly, I don't really understand. But I've proven in a couple of videos already that Cathie Wood is a charlatan that's only looking out for her own best interest. And I don't think she truly understands the distinction between non-productive and productive assets. Like, I'm not sure if she's actually trying to fool people here, or if she truly believes in the value of Bitcoin. Okay, last closing words. I'll admit that I haven't done a ton of work on crypto because to me it's just obvious that crypto is a non-productive asset, and as such you can only speculate in that asset, which, as I said, is not wrong. It's not morally wrong. It's not like you cannot make money in cryptos, but you're speculating, and I think you have to acknowledge that. And if you want to allocate a certain percentage of your portfolio to crypto, just to have that aspect covered in case it goes up another 10x, go for it. That is not something I would do, because my understanding of investing is only to invest in real assets that have real intrinsic value. But if you want to do that, go for it. I don't care. I really don't care, just like Jamie Dimon. And I'm happy for you to prove me wrong, to call me ignorant, stupid, or whatever. Let's have a productive discussion in the comments down below. And that's it for today. Take care.